Good morning. This is Jared with the Helton Group, and today we're going to be letting some knowledge what's going on in the mortgage market. So it's a good week for the mortgage market, which is kind of nice to say because we haven't said that much. But we'll go over what's going on. You have the Case-Shiller came out. They showed that home prices were, fell, which is no surprise there. They still increased year over year, it's almost 13%. The FHFA, which is really the ones that come out with, they're the parent of Fannie and Freddie. They said home price appreciation released theirs again. It was a little bit less than what it has previously. No surprises. The Mortgage Bankers Association said that we should see a recession maybe the first half of 2023. They think interest rates will probably sink down to the fives, which is also be very nice. Home sales down in September, but overall, they're strong. I mean, there's still not a lot of inventory that's built up, which is kind of nice. Median home price was 8% versus 6% what was guessed or estimated it would be. And then this is kind of crazy, but I'm feeling it firsthand. Mortgage applications are down 69% year over year. So pretty brutal how that is, but it's the market. So the market's always right. So what does that mean, right? So the last 30 days, we've had interest rates kind of on the rise, but the last week we've had a really good week. So it's kind of been nice. So that same thing we look at, that vanilla loan, that $400,000, 20% down loan, we do that every week. Rates came down 0.5%, so down into the mid sevens or low sevens, and that means the payment dropped $140 less today than if you would have locked last week. And they're almost down to what they were last month, but still up obviously substantially from a year ago. So when we look at that, what that means for home, what you can buy. So last week you could buy, $26,000 or $24,000 less for the same price of home, and then it's still a little bit less than what you could borrow or for the same price a month ago. So again, buy downs are probably more common than not. I think most people are buying down rates of interest. It's gotten a little less expensive. You'll see that. You could buy it down to where you're getting into the sixes again, which is kind of nice. And the break-even period is 36 months. And 36 months has kind of been my over-under. Do I think that someone will keep a loan for 36 months? It's questionable because if we go into a recession, probably people keep it alone up until it makes financial sense to refinance it. But certainly doing a lot better this week than we were previous weeks, and I'm glad to hear it. So hopefully you are too. And then back to the rates. So the year was... What year was this? The year was 1997. We had the Spice Girls, 7.84%. So a little bit better today than what it was in 1997, which is the year after I started doing loans. But still, we got some work to do on getting those interest rates down a little bit. So if you need anything over the weekend, please don't hesitate to reach out. We're more than happy to help you. And thank you for watching. We'll talk to you next week.